Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Kevin McNew. Today is Wednesday the 21st here, and we had a mixed day in the market. Let's turn over to the Grain Hedge trading app here. You'll notice that corn traded down 2 3/4 on the day, soybeans up 1 1/2, and wheat in Chicago here mostly unchanged, only closing down quarter penny here on the day. Now, one thing we did notice is that this morning we got another export sale out of China. Now, this wasn't a cancellation. This comes in response, actually, or not response, but following the cancellation that we saw here on Tuesday of 174,000 metric tons. Today we get a sale of 176,000 metric tons going to China. Now, I think what we can take out of this is that we have received 2 cancellations here, one last Friday, one on Tuesday. Now we get an export sale. There's a little bit of confusion here. I think the bottom line is we know that we are going into the time where China starts to wrap up their buying program here in the northern hemisphere. They're going to start looking to the south. I think that those 2 cancellations are something we need to pay attention to, but it was good to see some export sales still this morning.
Right, and Cody, you know, even though the market, the futures market, is focused on these cancellations, the reality is we still have sizable commitments left to ship in the second half of the marketing year, and we're starting to see some strength in basis, especially along the river as a result. Let's take a look at this chart here coming from our Grain Hedge market intelligence, cash market intelligence, and what you'll notice in green is the St. Louis River Terminal basis for spot soybeans, in red a river terminal along the Ohio River in Kentucky, and then in blue a crusher in Mexico, Missouri. And what you'll notice is that crusher in Mexico, Missouri, like many crushing plants, is pretty flatlined in the last 6 weeks. But the river terminals are starting to gain strength. Even today, we saw 8-cent jumps in basis while the futures market was pretty tame. In St. Louis, we only saw a nickel gain. But that's telling me that these exporters or these river terminals are sensitive to the fact that they need to start attracting some beans out of farmers' hands. And with the futures market not helping, it may fall on the backs of basis to get more aggressive here.
So what would you say is the takeaway here for producers? If you're a producer, you know, you see here that river terminals are moving higher. What is your play?
Well, certainly, you know, traditionally you may be moving grain to crushers, but if you're in a situation where you're close to a river terminal, especially the Ohio River or lower Mississippi or the Illinois, you're going to be looking more aggressively at those places. And I do think that we're going to start to see basis levels return to where they were at the end of December when exports were white hot. You know, right now they're not as hot, but I think they're going to have to pick up, and the river terminals are going to have to bid it up a little bit to get it out of farmer hands.
Well, that sounds fair enough. Let's take a look at the charts here and kind of get an understanding of what we saw price activity do and what that means when you look at the chart landscape. Right now we're looking at the March daily corn chart here. This is a candlestick chart. You can get this on the Grain Hedge trading platform that we provide. You can get that as a demo. Go up to the top right-hand corner of our Grain Hedge website and take a 14-day free trial. You'll be able to see these on your own computer. But you'll notice that we got up there for corn. We got up there around 391 area. That was a resistance, and we weren't able to penetrate. Notice that was a previous low here in the last couple weeks. We found that it was support. We had a roll reversal that turned into resistance today, unable to move really past that high. We saw a similar situation here for soybeans. You'll notice that this range that we've traded in since the end of October, we have the low side of the range. That was support. Of course, we fell through that yesterday. We tried to rebound a bit today, really unable to get any sort of momentum either to the upside or the downside. I wouldn't be surprised to see this area, which was support, really be a very key resistance level. I would be very surprised if we mount this resistance level here in the next week or so. Right,
and Cody, today was certainly an instance of very choppy two-sided trade. You know, the market just doesn't seem to have strong conviction one way or the other. We talked yesterday about the wheat market having sort of taken a breather from the big big sell-off we've had. And so I think, producers may need to be realizing that we're probably in for a period of pretty low volatility, or certainly choppy two-sided trade.
Yeah, absolutely. And when you look at that March daily wheat chart, you'll notice that, yesterday we did find a little bit of traction here. We traded lower and then closed up near the highs of the day, but just were unable to have any sort of follow-through in today's trade. We kind of closed, for the most part, unchanged. But other than that, guys, that wraps up today's show. Keep in mind that we'll have the EIA numbers out tomorrow. We'll have export sales out on Friday. Normally that's released on Thursday, but it was delayed one day due to the Martin Luther King holiday. If you have any questions about what we talked about today, give us a call. Number's 877-472-4607. Thanks a lot for tuning in. We'll see you here Thursday.